It's the beginning of a new month, and that can only mean one thing. It is time for your piping hot monthly Bitcoin digest. Let's jump in. Welcome back to another video. My name is Ian Major. I'm an entrepreneur, Bitcoin pleb, and all-around raging capitalist. And for those who have watched this channel for some time, you know that I'll often do these monthly digests to kickstart a new month and do a survey of all the big happenings and big themes happening in the world of Bitcoin. Sometimes this will delve into recent price action and kind of the macroeconomic backdrop, which drives a lot of what we see day to day. And that is not to necessarily fixate on near-term price action and where price might go in the next week or month, but rather to develop a better understanding for how this market works. And so if you do have, a dollar cost averaging plan and you've got a little spare powder set aside for some of the big dips, maybe that will help as well. But there's a lot to cover today, so you're not going to want to miss a thing. For those returning to the channel, welcome back, my friends. As always, it's a pleasure to have you. And for those new to the channel, I welcome you as well. If you like this type of content, I invite you to consider subscribing and join us in our growing merry gang in cyberspace. In addition to apparently looking like Jim Hopper, I cover a whole slew of Bitcoin-related content, including tutorials on how to acquire Bitcoin, secure it, privacy best practices, running your own node, and more. You want it, I cover it. That is how this channel works. But with all that out of the way, let's go ahead and jump into the meat for today. So one of the biggest realizations for me over the last few years has been how dominant liquidity is in informing the performance of different types of assets. We live in a world where liquidity is king, and that is all that matters. Right? Think of like the cutesy Ben Graham, value investing principles that maybe you once learned about how to pick stocks and performance and all this stuff based on their fundamentals. All of that is completely out the window, arguably since the great financial crisis back in 08-09. And the reason for that is pretty straightforward. Think of how debt works. Debt piles up and piles up and piles up. And the show can go on as long as different market participants have enough liquidity to service that debt, right? To pay the interest on their debt. Otherwise, those entities become insolvent. And so to the degree that liquidity is increasing in the system via things like quantitative easing, then everything's rosy, right? There is no real kind of concern. If the liquidity taps are on, everyone's got enough money sloshing around to pay the debt, and they're taking more debt out, and so on and so on and so forth. And so the house of cards can continue. But when liquidity gets sucked out of the system, the entire thing goes in reverse. People sell everything they have in order to raise cash so that they can pay their debt. It is all driven by the fact that many actors, both at the individual household level as well as business level, and now sovereign nation level, are way over indebted. And so this is why we have these very erratic phase shift moves, as Luke Grahman likes to say, one of my favorite macro thinkers that I follow quite closely, right? It's no longer this kind of fine-tuned dial of a central planner. It is an on or off switch. On means liquidity is coming into the system. The party can go on. No one has to care about their debt. They can kick the can and risk assets all rise accordingly. But now, with inflation having run hot for some time now, the Fed wants to really demonstrate its conviction and capability in reining in this inflation problem, especially with the US midterm elections coming up in a few months. So as Dylan shows in this chart, this is sort of what happens. Basically, the combined balance sheet of a number of the world's largest central banks. You've got the Fed in here, you've got the ECB. And as we can see, right, that liquidity is turning over modestly, but that has a huge impact for the returns, in this case of the S&P 500. And closer to home for many of us, the same is true with Bitcoin, as we can see. And this is pretty clear. And it's been pretty funny. There are many kind of influencer types out there who are like, see, I told you Bitcoin is not a hedge against inflation. And, the observation there is like, well, look at the performance of Bitcoin over the last several months. while inflation as measured by CPI has been really running quite hot. And so there's this criticism that, oh, Bitcoiners are just going to look for the next narrative. But I really do think it can be better articulated as a hedge against monetary debasement, right? Basically, as money supply goes up, Bitcoin goes up. As it goes down, it goes down, and that's because it's trading as a risk asset currently. When and how that breaks free remains to be seen. But this is something we just sort of have to accept, right? In this world of over-indebtedness, liquidity is the single thing that matters. Everything else is an afterthought. And so what does this mean? Let's be a little more prescriptive. Of course, saw the 75 basis points, so 0.75% increase in the Fed funds rate as of the end of July, with further posturing from Fed officials. You know, they're trying to really keep their straight faces on and say, we're going to hike even more. And so it remains to be seen. I think the big question is what will happen in September? Right now, markets are pricing in 50 basis points of rate hikes. And so the question will be, do they do that? Do they do less? Do they do nothing at all? Do they do even more? That, I think, is going to inform probably one last interesting market mayhem moment as we go into kind of the last quarter of the year or so. So I personally am still hopeful that there may be some awesome buying opportunities for Bitcoin left to come. You know, I am not a trader at all, but it does seem like a bear market rally that we're currently observing here. But I am hopeful for one big, massive leg down further. Maybe that's just a hopeful pleb trying to get his hands on some cheap sats. But let's see. I think we could see some big fireworks later this year. A lot of folks are sort of anticipating that. And so maybe because of that, we don't. But the list of negative economic news is truly staggering. You've got everything from, home prices falling the most ever over a 2-month span, as Dylan highlights here. You've got tons of layoffs happening. You've got, Walmart here, lots of big tech firms, Coinbase, and others that, laying off thousands and thousands of jobs. Credit markets are looking quite rough with the inversion of the 2- and 10-year yields. And we're, of course, at the point where governments are changing the meaning of words. So a recession is not actually what we've been told is a recession, because look at all these other things that are happening. As this timeless quote from George Orwell reminds us, the party told you to reject the evidence of your eyes and ears. It was their final, most essential command. And if all others accepted the lie which the party imposed, if all records told the same tale, then the lie passed into history and became truth. And so make no mistake, we will see more and more of this type of gaslighting and redefinition of words and meaning as governments try and navigate an increasingly tenuous position, both in terms of their fiscal status as well as the kind of unrest and distrust that is rapidly growing among their populations all over the world. It is going to be a turbulent time, I think, for the rest of this year. And so doom and gloom is probably the right TLDR for where things stand as liquidity continues to get sucked out of the system in this over-indebted structure that we call an economy. There will be more pain ahead, including the sell-off of risk assets, of which Bitcoin is in that category, at least for now. But this will only accelerate the pace at which the Fed will be required to pivot. And so one would imagine that happening somewhere between September and beginning of next year, given how things are quickly falling off a cliff. So that'll be interesting. Will that sort of form the true kind of generational bottom or the next big push up? Remains to be seen. But let's talk about some of the other news happening in the world of Bitcoin beyond this kind of macro backdrop, which does admittedly drag heavy during times like these. But there's a lot of exciting stuff happening, and so let's take a look at that next. So one of the big pieces of news is around Fedi, so a new company that is going to really spearhead and drive development of Fedimint, or federated Chalmian E-mints. This is a really interesting concept. I did a whole video on this a few weeks back that I would encourage you to check out because it really is a great topic for debate. So the way I think of this in a nutshell is basically kind of an in-between custody model, right? It's not fully self-custody in terms of you, the individual, holding your keys, but it's also not just sort of having them on an exchange or some other third party to which you have really no affiliation other than maybe being a customer, etc. And so it allows the creation of these kind of mini federations. And this could be a community, your local community. This could be your family, you and your extended family. And so I think if done right, it really does represent a better solution to the fact that not everyone in the world, not all of the 8 billion people, are going to even have their own UTXO, if you think about it, right? That's a crazy thought. And so this has a lot of actually different benefits, even related to things like privacy. But at its core, it is attempting to solve for this challenge that there's just logically no way to have everyone on Earth with true self-custody of their own UTXOs. It's just mathematically not probably going to happen. So while it's very exciting, it's also important to acknowledge and be very forthcoming about its limitations and about the fact that it's not true self-custody, which I think there's a risk, whenever these types of projects tend to get marketed, there's a risk to make them sound like the greatest thing since sliced bread. And there's not always a fair discussion of trade-offs, but very exciting to see how this will shape up and develop further. I do think this is a really, really important ingredient when we think about global adoption of Bitcoin. So again, check out that other video and make sure you're subscribed if you haven't already, because I will definitely be covering more on Fedimint in the future. We've continued to see Lightning capacity grow, as Kevin Rook outlines here. We saw a 10% growth just recently, which is pretty impressive when you think about it. That really is a strong signal when the kind of overall water level, if you will, or the tide that raises and lowers all ships, that tide is very much going out, but you still see positive growth in the Lightning Network. Now, on the other hand, it is also worth putting that number, 4,400 Bitcoin, into context. So for context, there is literally more Bitcoin in Samurai's Whirlpool implementation for CoinJoin. And then, furthermore, there's probably a couple 100,000, maybe between 1 and 200,000, something like that, Bitcoin locked up on Ethereum as wrapped Bitcoin. So the 4,400 is very small, and we should kind of keep that in mind. But I do think the exponential growth that we're seeing is real. It's the real deal. There's a lot of exciting development continuing to happen with Lightning development kits. There's something called Twilight, which seeks to make payment channel networks such as Lightning even more private. There are some privacy benefits currently to Lightning, but it is not the perfect privacy solution that some of its proponents make it out to be. I'll probably do a future video on that if you are so interested. But net, still early days of Lightning, but man, it is very, very exciting. I think that's where some of the strongest signal in all of Bitcoin is currently. In other news, El Salvador reported an 82% increase in tourism in the first half of 2022. Not actually sure if that is versus the year prior. And so you could argue, well, generally more people are looking to travel, etc. But, just even eyeballing some of the similar rates in other countries, this is clearly there is something here. Clearly there is something, some impact that the whole kind of Bitcoin adoption story is having. And so despite what all the media pundits are frenziedly trying to cover up and hide and say how badly El Salvador's Bitcoin experiment is going, the reality appears to point to an alternative conclusion. Talking about media pundits misconstruing reality, we just saw Michael Saylor step down from his CEO role. He will now go on to be solely the chairman of MicroStrategy, and in his words, focus even more on Bitcoin and their Bitcoin kind of holding strategy. And despite publications like the Wall Street Journal, opinion pieces out on how MicroStrategy's big bet on Bitcoin has gone so wrong, the reality once again doesn't quite seem to agree. MicroStrategy, since the beginning of their Bitcoin strategy, is up 123%. That's actually, interestingly enough, a bit more than Bitcoin, and is far in excess of what the S&P has done, and really any of the big tech companies for that matter. Doesn't seem like MicroStrategy is losing to me. So as always, this concerted effort of the media, which is really just a government puppet at this point, desperately wants you to not believe in this story, in this movement that is Bitcoin. Surprise, surprise. Another really interesting article is that Tesla was revealed to have sold the vast majority of their Bitcoin holdings. You had Core Scientific and others also dumping and unloading. What I think is the actual story there is how price is not lower than where it is, right? Because in addition, you've had miners capitulating, as we can see. There's this hypothesis here that maybe we've seen the bottom of hash rate given the difficulty adjustment we just saw. But man, ASIC prices are looking incredible. Done the math. I could probably do a video on this if it's of interest, but the math of mining, even where prices are where they are now, is superior to just market buying Bitcoin. So even despite, some of the miner capitulation and some of these great prices we're seeing for ASICs and, big companies like Tesla selling most of their holdings, combine all of that with the macro backdrop we just discussed, I continue to be pretty amazed that the price is and has been where it has been. I think that is great resiliency. And it reflects the following view, which is that, this is really number of users go up technology. We love to see it. And if all that wasn't enough, we are now officially less than 9% of the 21 million Bitcoin that will ever exist that is remaining to be mined. Less than 9%, over 91% of Bitcoin is now mined and circulating or being held. And so some of you are spending an awful lot of time picking fights with Twitter anons when really you should be finding new ways to stack. So bit of a mixed bag of news and highlights. Let's go ahead and conclude today's video. All right, my friends, there you have it. We took a look at the kind of macro backdrop and how liquidity, above all else, dictates the price of assets, at least while we're still in this over-indebted fiat monetary system. And we talked about the potential important implications for Bitcoin. Again, none of this is financial advice. None of this is an attempt to predict near-term prices, but your boy definitely has some bids set for some very low levels to try and acquire some very cheap Bitcoin if we do see another huge leg down in sort of Q4-ish of this year before the Fed is forced to inevitably pivot. So that is something I am looking forward to, hopefully, but we'll see if it actually manifests. Then we talked about some of the big news around things like Fedimint, Lightning Network continued growth, as well as some different news pieces around the world. And so it just goes to demonstrate nothing has fundamentally changed. In fact, the fundamentals have gotten even better. But as we covered, fundamentals don't necessarily matter in terms of price, at least in the immediate term. But you love to see the trajectory that Bitcoin is on currently. But what are your thoughts? Did I miss anything? Leave me your thoughts, questions, comments, future video ideas in the comments down below. But I hope you found this valuable and informative. If you did, you already know what to do. Give this video a like. Use the share button below this video. That really does help the algorithm get this in front of more people, get the channel in front of more people. But for now, we'll go ahead and leave this video here. As a reminder, every sat counts. And until next time, I'll see you then.